Hey traders, how's it going? I hope you guys are having an amazing trading week. Good day from wherever it is you're watching me from. And I'm officially welcoming you to today's session of Octa's live trading. My name is Ambrose Ebuka, and usually, it takes a minute or two for some persons to join this session. So we're going to give them that time, 1 minute or two. And while we give them the time, you can go ahead and let me know your name and where you're watching me from. You can go ahead and let me know that in the chat. Go ahead and let me know in the chat your name and where you're watching me from. You can also tell me if this is your first time, participating in an Octa live trading session. In this live trading session, you would learn how to analyze the market, some of the ways that you can analyze the market, and we'll look at the news, how you can read the news and understand it before opening an order. We'll also look at the methods of opening and closing orders in real time. And also I'll show you some of the steps. I like to call them framework. Some of the steps that I use to analyze the market. Now, in the course of this training or this session, if you have any questions, please ask in the chat or in the comment section, and I'll be checking frequently to answer your questions. All right. And while I analyze some pairs, you can also let me know the pairs that you would like me to analyze as well, and we can look at that. Okay, quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this training, in this webinar, or linked to this presentation is provided as general market commentary and does not constitute investment advice. So I'll just give you guys a brief about myself so you guys know who I am. For those of you that don't know, my name is Ambrose Ebuka and I have 5 years of trading experience. And in these 5 years, I've been able to hone my trading proficiency and contrive various profitable strategies that includes swing and scalp trading. I also analyze gold, GBP, JPY, GBP USD charts with an outstanding accuracy exceeding 85% and regularly backtest trading strategies for effectiveness. Now, if you're not already, you can join the Octa Nigeria Telegram chat. The link is going to be in the chat as well or in the comments, so you can join. You can see that in the comment already. Okay. So you can click that to join probably after this session so you don't get distracted. Okay, so what's on the agenda for today? Well, just like I do on my live trading sessions, I like to look at the economic calendar, kind of explain what's happening today and, sometimes for the week so we can prepare ourselves. And I'll talk to you guys about the strategy that I use. It's a zone trading strategy, and I call it the Zap Zone strategy. Because we're zapping into the zones, right? And we'll review the DXY currency. All right, so the DXY chart, rather, it's like the dollar index chart. I'll also explain the dollar index and its correlation with other pairs like GBP, Euro, all that, NZD, USD, and all that. And finally, we'll have a Q&A session, right? So if you have any questions, you can ask in the chat so you don't forget. I'll always check the chat to answer your questions. Okay, this session is going to last for 45 minutes, and like I always say, use the YouTube live chat to ask your questions during this webinar. I'll constantly check to answer all your questions. Now, what does the strategy that I'm going to be using consist of? This is the steps to trading. Earlier I said we have steps to trading that I'm going to teach you guys. Again, if you're just joining, welcome to the Octa live trading session. My name is Ambrose, and I see some people in the chat already say my name is Rajat from Dubai. I'm Justice from Nigeria. Welcome, massive welcome to every one of you. If you just joined, you're not late. I mean, we're just getting started. So I'll just ask for your attention, and also if you have a note, a journal, you can use that to also, jot things down. Okay, excuse me. What does the strategy, the Zap Zone strategy, consist of? These are the steps or the framework that I use, right? The first is understanding market structure. Now, why I call it framework is because it's just like, building a house. When you want to build a house, there would be an architectural design for that house. You have the architect do a design. In that design, you'd see the living room is going to be about this square meter. The kitchen, just that design is kind of like a skeleton of the house, right? And the house will be built based on that design. So that's the same thing with the framework, right? The framework are the things that would guide your trading decisions, even before you execute the trade, just to make sure that some of these emotions are eliminated while you're trading. All right. Emeka from Tanzania, Amaka from Nigeria, Lovette from Nigeria. Welcome, 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 every one of you. Happy to see you guys here again today. Again, I'm just going to ask you guys for one thing, and that's your attention. All right. So the framework consists of or includes one, understanding market structure. What do I mean by this? Now, you should be able to come into the market as a trader and perceive the trend. You can do that by understanding the candlestick charts, understanding patterns, understanding trends, areas of supply and demand. Why this is important for you is because when I'm analyzing some charts and some pairs, this is the framework that I use. So it's important that you pay attention so that when I'm using some of these terms, you understand, what step I'm on. Okay. So understanding market structure, we're going to be able to look at the trends, patterns, supply and demand levels, which is also support and resistance levels. And we'll be using the candlestick chart. The thing is to identify key levels, right? Key levels can be identified by using trend lines, moving average, Fibonacci, support and resistance, which I'm also going to be using. The third step would be to predetermine your entry and exit point. Now, for entry levels, right, I like to use the candlestick as my final confirmation. We can also use a moving average, bounce, or break as well. But I like to just use the candlestick close as my final point of confirmation. And I'll show you guys why that is important. The exit as well, I use swing highs or swing lows, candlestick closes, candlestick highs or lows rather, and the stop loss and take profits automatic orders as well. Now, if you're new to trading and you would want to use indicators, you can use the ATR indicator to help you determine your stop loss, which is the average true range indicator. You can use that to determine your stop loss. And finally, risk management. Now, your risk management would consist of your lot size, a conservative lot size, your risk to reward, a moderate risk to reward. I'm going to explain and give you guys risk management tips towards the end of this session. Now, if you made it this far, here's the catch. Now, at the end of this session, I'll be revealing a promo code that can give you a 100% bonus on your deposit. So do well to stay to the end so you can get that promo code, which would give you a 100% bonus on your deposit. All right, so I just talked to you guys about the steps, and these are the things that make up the strategy that I use. Again, we're going to review these things before we execute a trade. Okay, so you want to already determine your entry point. This is where I want to enter this trade, and this is where I want to exit this trade, even before entering the trade. Now, one of the mistakes that most traders make is they let the amount that they're making or the amount that they're losing determine if they should continue holding the trade or they should close the trade. So a trader can just be like, well, I'm making $1,000 on this trade and I want to make 5,000 before I close it. Now, as traders, just a quick tip, you don't let the amount determine if you should close or keep holding. You let the market condition, the structure of the market determine. All right, the market doesn't really care how much you're making on the trade. It's going to be it wants to move, okay? What kind of traders is this strategy suitable for? As you can see, basically all traders, the day traders, which are traders that, try to close the trades within the day. They look forward to closing the trades within the day. The swing traders try to hold the trades for weeks and days as well. The scalpers get in and get out, just spend short time in the market, and the position traders that hold their trades for months and even years, right? So it's basically suitable for all traders. Why? Because it's a zone trading strategy and the market moves and respects zones most of the time. I'll show you guys that when we go to the live chart. So when do you use this strategy? During volatile sessions, right? An example of a volatile session would be an overlapping session. Let's say like a New York and London, a London and New York overlapping session, which would be around like 1 p.m., 2 p.m., 3 p.m., all the way up to 5 p.m., right? The London session will close at 5 p.m. Nigerian time. That's GMT +1. So you can convert this to your own time zone to basically understand. But again, Tokyo session can also be volatile. And one of the reasons why it's important to trade this during volatile sessions is because we want the market to move, right? So if the market doesn't move, traders would not make money. Traders make money from volatility. So you want to be able to look at overlapping sessions. Also, midnight sessions like the Tokyo session for Nigerians can also bring about volatility. And after major news events, I didn't say during major news event, because during major news event, the market can move wildly up and down before it starts to go in, its intended direction. So you can use it after major news events, so you can get a clear understanding of market direction. So this is just to introduce you guys to what this strategy is all about. And I hope you guys are following. If you're following, let me know in the chat, please. If you understand, let me know in the chat. And right about now, we'll just move over to the live trading session. Okay, remember I told you guys that the first step would be to check the news, check the calendar, know what's going on economically. And one of the reasons for that is because fundamentals and, economic events are major market drivers. All right. If the economy of a country is doing great, it's going to have a positive influence or a positive impact on the domestic currency of that country. So let's say inflation in the US is low. Unemployment rate is not high, it's low because a lot of people are getting employed. So unemployment rate is low. Economy is doing great. It's going to have a positive impact on the US dollar. And what would that mean? It would mean that the US dollar is going to increase in value, right? Sometimes the currency can be doing, or the economy can be doing bad. And this would cause the central bank to increase the interest rate to support that economy and reduce inflation, which would also bring about a certain amount of positivity or increase in value of that currency. And that's why when you're looking at the economic calendar, you don't just trade it in isolation. You also combine with technical analysis. So I'll just give you guys a brief introduction to the economic calendar. This is the Octa economic calendar. I'll show you guys how to use it. And at your own time, you can do the practice. Okay, very important, guys. Very important that you're consistent. Very important that you practice. You don't just learn today and expect the thing you've learned to just stick to your brain, guys. In trading, consistency is king. Consistency is the bedrock of successful trading. It's not about hitting home runs with every trade, but it's also about making steady, consistent trades that will potentially give you consistent profit. So stick to your trading plan if you have any, trust your analysis, maintain discipline, and most importantly, whatever it is you've learned, put it into practice until you've reformed it to work over time for you and give you consistent profits. Guys, with consistency, you can achieve great things over time. Okay, so let's look at the economic calendar, okay? One of the important things that you should note with the Octa economic calendar, if you're just seeing this for the first time, is the time zone, right? So first, you want to make sure that the time zone is set to West Central Africa if you're in West Central Africa. You can always use your time zone to, change this. The reason for this is so that you don't miss out on an economic event and wait for it on a time that isn't your time. And you also want to use the advanced filter option because there's some countries here that are not checked. And that's because I don't trade those currencies. I just focus on the ones that, I trade or I just want to gain knowledge about. Okay. And if you're a beginner trader, also very important that you check these boxes, the medium and the low impact events. I like to keep mine at high impact event because just like the name goes, it brings about, an increased amount of volatility compared to medium and low impact. But just for the knowledge, as a beginner, you can include the low impact event so you can just get the knowledge. How many of us understand exactly how to use the calendar now? Let me know in the chat. Okay, so one of the today's focus on the economic calendar was majorly around the US dollar, right? Consumer price index. And if you want to know what consumer price index is, I'll just keep it brief and show you guys how to do that, right? So just click on this or click on this. Any of the events that you click on, Octa provides, an explanation on that economic event and why it's important. As you can see here, inflationary and deflationary tendencies are measured by periodically summing the prices of a basket of respective or representative goods and services and presenting the data as the CPI. Just so you get an understanding of what it's about, okay? This CPI excludes food and energy, as you can see here. And this is also an important aspect of the economic event. Generally speaking, a high reading is seen as bullish for the US dollar, while a low reading is seen as bearish. And what do we have? We had a low reading. I'll show you guys how the US dollar reacted in the chart, and also would compare that with other pairs or other currencies that appeared with the US dollar, and you'll also see how it's reacted. Okay, so generally, what you guys need to understand about CPI is there are different categories, right? Food, energy, and we have, all items CPI. And we also have the CPI that excludes food and energy. Guys, this video is going to be saved in the Octa YouTube channel. So, you can always come back and watch so you can get an understanding. Okay? I see a lot of you guys telling me, yeah, you're catching up, you understand and all that. That's beautiful. That's amazing. But guys, it's also important that, you watch again and again and again so that it's kind of sealed in your brain, It's just there and it can't go away. All right? Just like some of the basic addition and subtraction that you've learned from when you were a kid, some of those things that you learn. You just come back and learn so that it can stick in your brain. Okay, so all items CPI rose by 3%. As you can see, YOY means year over year. Food increased by 2.2%, energy increased by 2.5%. Very important that you also keep an eye on energy because this includes oil, gas, all that. And we had core CPI increasing by, which is slightly below the previous forecast of 3.4% and the previous month of 3.4% as well. Now, for you as a trader, understanding the CPI reports can give you, valuable insights into economic trends, potential market movements as well. Let's say, for example, the interest rates, what to expect from interest rate. The CPI is a major indicator for inflation, which means the Federal Reserve is or the central banks would pay attention. They'll closely monitor the reports from the CPI, because it would help them make decisions on interest rates. A lower than expected CPI could give a signal for interest rates, pause or slow down. And this can also influence the US dollar as well. Also look at energy sector, which I told you guys. If you're trading oil, if you're trading gas or utility stocks, you also want to pay attention to the energy sector and see if it's, increasing or if it's declining. Right? And finally, the dollar currency itself. Also important that you pay attention to the CPI because it directly influences the dollar. I'll go over to the chart and show you guys how the DXY, which is the dollar index, reacted to these reports. But basically, if you look at these reports, you'd see that we had low reading compared to the previous, low reading compared to the forecast, and also compared to the previous, low reading again compared to the forecast as well. So naturally, this would be negative for the US dollar. In the Forex market, a good CPI report or statistics can cause an upsurge of the US dollar. Okay, and when you see the CPI rates fall below, the forecast, it can lead to a depreciation in value of the US dollar. Tomorrow we have PPI and Michigan consumer sentiments coming up. Expected to be bullish reports, but it's something that I believe you guys should keep an eye or just pay attention to. And by 11:30 today, we have President Biden's speech. I don't really expect it to bring about much volatility to the markets, but again, just try to pay attention. Okay, let me know if you guys understand how to read the economic calendar at this point. Let me know in the comments if you guys understand exactly how to read the economic calendar. Again, this is the Octa economic calendar, and if you're going to be using this, there are also some extra tools that you can use. Trading calculator, profit calculator, pip calculator, all this. You can also use them to calculate your risk, calculate your potential profit as well. or just so you can be sure, you know, how much you're potentially going to make out of each trade even before you execute the trade. If I get a lot of comments saying that you understand, then we'll go straight into the charts. But let me know in the chat if you guys understand. And again, if you have questions, right, you can ask a question. I may not answer them right now, but there'll be a section for Q&A, and I'll answer all your questions. Okay, so let us go to the charts. Within these predefined zones, rather than trying to predict, you know, market movements outside of them. So I'll give you guys an example, right? If you've been following the analysis we did on the dollar index, you'd see that over time we've had specific zones mapped out on the dollar index. Let's give that a second to load. All right. We've had these specific zones mapped out. We're still going to see more coming. It's still loading, I believe. Let's give it some time. Okay. So most of these lines that you see here, yes, they serve as support and resistance, supply and demand. But what is very important about these lines are they don't just serve as lines. You know, they are also zones where the market has made retests in the past. Here, you know, come back to the future 12, all the way down to the most recent price action. As you guys can see, we had bearish or negative news on the dollar, and what happened to the dollar? And even here, right? But you can see how important this area is for the dollar index market, and that's why we pushed all the way down. We got rejected, and now we're just going to be trading here for a while. But I still expect the dollar to be weak in the coming weeks, you know, trade within this zone that I highlighted. And again, if you've been following the analysis we did on dollar index, this zone was predetermined, and this one as well, because the market is still going to, you know, come down here to trade within this zone. The weaker the dollar gets, the more it's going to push down and start trading within this zone. Potentially, we can get a retest on this trend line that we've traced from the monthly time frame. Let's go to the monthly time frame. Okay. So you can see that we've drawn this trend line, and what happened whenever the market got to this trend line, we always got a bounce to the top side. So the weaker the dollar gets, the more it approaches this trend line, and we'll potentially get a bounce there as well. But again, with zone trading, you're not trying to be ahead of the market, right? You want the market to get into your zones. It's one of the most patient ways of trading, even though, you know, all strategies require you to have patience. But with zone trading, you're going to have to be a little extra patient, you know, because, I mean, you're waiting for the market to get into your zones, right? This could take some time. But one important thing that you should understand when the market gets into your zone is that there's either going to be a break or a bounce, and that's what you want to look out for. All right. So let's say, for example, just as we got here, give me a second. Let's just zoom in. So found support here, rallied all the way to the downside, broke, made a retest. Obviously, you're beginning to see doji candlesticks, right? How many of us know what a doji candlestick is? Let me know in the chat. What does it signify, the doji candlestick? So again, technical analysis is a combination of trends, patterns, chart patterns, candlestick patterns, you know, indicators, all these things. Even though most traders feel a bit controversial with indicators, but I mean, these are things that work in the market, right? And not everything would work for you as a trader. The most important thing in the market is to look for what works for you and improve on it. All right. AUD/CAD may be the currency that works for you. Fibonacci retracement trading may be the only strategy that would work for you. But the most important thing is you've been able to identify in a market where there are vast and a lot of strategies, you were able to find what worked for you. And it's important that you capitalize on that. Okay? Sometimes we want to trade gold because of its volatility. You just run away from Euro USD. But if you look at overall market results and market performance, Euro USD may be the currency that gives you the most profit. But you constantly force yourself to trade gold, and you see yourself, getting a lot of drawdowns with gold. All right. So the same thing applies with strategies. It's important that you identify what works for you. And someone is saying they can't hear me. Guys, let me know in the chat if you guys can hear me clearly, please. Let me know in the chat if you guys can hear me. And stick to what works for you. That was what I was going to say. But again, most of the lines that we have here, most of the zones that we have here are, key levels, significant areas for us. I mean, you can see why we had a retest at this point. You see how important this level was for the dollar index. We broke out of it, had a retest, and now we're heading back down. Remember, we have PPI coming up tomorrow. I don't really expect it to make much of an impact on the already weak dollar, but it's something that we should keep an eye on. For now, I'm just going to reverse that. For now, the dollar is weak, and again, we're seeing pullbacks and retracements, but this would have to close above our key level before we can see a bullish dollar. As long as we continue to trade below this zone, I'll just indicate it for you guys so you guys can see. Give me a second. As long as we continue to trade below 104.5, this is continuous indication that the dollar is weak. Now, what happens when you identify a weak dollar? Okay, I see you guys say you can hear me clearly. Okay, I asked a question about the doji candlestick, and beautiful, someone has answered that. The doji candlestick signifies indecision. So when you see a breakout like this, and a retest, and on that retest, which is also retesting at a key significant level, which I showed you guys, we can trace this all the way back to this point. If you look at this line, I can take it here, we can see how many times we bounced off the zone. We broke above it, came back to retest, retest again, tried to bounce but couldn't sustain, broke below, and now we're back at this key level, and you're seeing the formation of indecision candlesticks. Doji signifies indecision, also reversal, weakness. But again, you want a confirmation candlestick. I always tell you guys, the final point of my trade analysis is confirmation. I could analyze the market, analyze everything all the way down to the lower time frames. At the point of execution, I need the candlestick to close bearish before I sell. All right. And if you can notice, we had the indecision candlestick, bearish momentum, another bearish momentum again, and we started to push all the way back down, right? So you can see this whole reaction here has given us an indication that the dollar is about to get weak. And then we had the economic events released today that even went further to prove that the dollar is weak, okay? So right now we're looking at a pullback or a retracement, just the market trying to ease up a little bit, because obviously if you look at the RSI, we are basically oversold all the way up to 17.5, right? We are basically oversold, so the market is going to try to push up and consolidate around here. But guys, like I said, as long as we keep trading below 104.5, and as long as we haven't our time frame. I mean, obviously, if you look at the dollar index and you see that the dollar index is basically bearish, it's also going to affect pairs like GBP USD and Euro USD mostly, because again, these are pairs that are featured in the US dollar index. We have GBP krona, Swiss franc, All right. So bullish pound sterling, right? We've successfully broken above this key level. And if you're wondering why this is a key level for us, we can trace this all the way back to this point. We've been following GBP USD and in this live trading sessions. And if you've also been following our analysis on GBP USD, you remember when GBP USD created a high that we indicated. And now because of this major news events, we've broken and pushed past that high, which would make this key level our first point for a potential retest. And I expect the pound dollar market to even push back and trade below this key level. Let's say areas like here, right? So this is not a good time to buy the pound dollar because, first off, we are overbought on the RSI. And if you're familiar with these markets, after an impulsive move, you always get a correction, you always get a pullback. One good place to prepare for a buy would be in these zones. Pay attention to how the market reacts to these zones. I wouldn't say here because there's every tendency that the pound dollar market would push even below this point to make a retest here. We have more market activity here than this key level. So again, not a good time to buy the pound dollar. I mean, if you want to capitalize on short-term profits or short-term volatility, then you'd even be going for sell on the pound dollar. All right. Okay. So that's my analysis on DXY and also the pound dollar as well. Like I said, not a good time to buy because we're having retracements at this point. I expect pound dollar market to consolidate and rally down, just dance around this level for a while before we have another move to the top side. And if we're getting a move to the top side, then this is our next area for a retest. The retest is going to come in handy at, let's just say, 1.3 psych level. Yeah. All right, guys. So if you understood the analysis, let me know in the chat as well. Right about now, I'll go over to the Octa Trader web platform and show you guys exactly what it's about. And you can only have access to Octa Trader if you have an account with Octa. So to do that, there'll be a link in the chat that you can click to create a trading account with Octa, or you can basically check the link in the description. There's a link in the description that you can click and you can use that to create an account. But guys, do that after this session, okay? So you don't get distracted. When you're creating your account, in the config page, choose Octa Trader so you can have access to this platform and also to Space, right? So Space gives you experts ideas, trade ideas from experts, their analysis as well. You can always look at what the experts are saying. You can see the definition, the signals as well. And you can basically just use that to, add to your own analysis, use that to trade and potentially make a profit as well. To execute trades, all you have to do is to come over here, click on whatever pair that you like. Metals, you'd see gold. Currencies as well. You just click on any one of them. You can put in your lot size, your preferred lot size, buy or sell. Once you do that, you can also modify and put your stop loss and take profit levels as well. You can place pending orders, right? If you don't want to execute at instant market time, you can use pending orders to execute your trades, put your entry price, your take profit price, your stop loss price as well. Octa goes ahead to show you how many pips that would be in profit. And you can just, take advantage of these tools to execute your trades. The trades, when you execute buy or sell, it's an instant execution, right? It just goes straight to your orders. Your pending orders comes over here to the pending orders as well. Okay. All right, guys. I think I'm going to get your questions at this point so that I can talk to you guys briefly about risk management, So if you have questions, please go ahead and ask your questions in the chat. Remember, if you want to take advantage of these tools that you have here, you have to create an Octa Trader account, right? In the configuration, you see MT4 and MT5, and then you see Octa Trader. So you can choose Octa Trader. This is the web terminal for Octa Trader. On the app, you also have this on the app as well. And take advantage of it. You have the trend lines, the same tools that I used in TradingView. You can use that over here as well. You can also, connect from your Octa Trader to TradingView charts to also analyze and take trades. Okay. While I wait for you guys to ask your questions, I'll just run through some risk management tips that can keep you consistent in the Forex market. First, you want to assess and get an adequate knowledge of the Forex market and its risks before trading live, okay? You want to also backtest any new strategy that you learn. You want to test that on your demo account before trading on the live account, all right? You also want to understand the impact of leverage in Forex trading. We have up to 1,000 leverage with Octa, and leverage is a two-way street. It can give you maximum profit, but you can also expose your account to a significant amount of risk. So while you're increasing your leverage, make sure that you're minimizing your risk. You're using a moderate position size like we have here. You're using a moderate risk to reward ratio as well, and a moderate lot size. Work on your risk appetite. Set stop loss and take profit levels on your trades. Use a trailing stop. A trailing stop is a stop loss that you adjust while your trade is in profit. If you did not know, when your trade is in profit, you can move your stop loss slightly into profit or at your entry level. So even if the trade reverses, you're good, right? It's a risk-free trade. Control your emotions. Don't over trade or revenge trade. There's going to be plenty of opportunities in the Forex market, guys. Plenty. Tomorrow, next tomorrow. With Octa, you can even trade on weekends, right? So don't try to compress your entire trading career on one trade or on the next trade, okay? So don't overtrade, don't revenge trade. Know when to stop after consecutive profits. I mean, sometimes when we make a lot of profit or we have a profitable week, we just start to feel like masters of trading. You need to have a trading plan that you stick to and just know when to stop and come another day, okay? Never risk money you can afford to lose. You can risk 2% or less per trade. If you want to risk 1% or even less than that, that's fine. But whatever risk amount you want to take, just keep in mind that your risk percentage is what is going to help you stay longer in the markets. All right. Like I said, guys, there's a link in the chat that you can use to download the Octa Trading app. There's also going to be the link in the description. After the live session, you can check that and download the Octa Trading app. This app offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. We also have various educational resources, webinars, live trading sessions, 24/7 customer support, and a strong commitment to funds and data security. Now, if you made it this far, congratulations. I'm about to reveal the promo code. I think you can already see that on the screen. It's Ambrose E100. The promo code gives you a 100% bonus on your deposits. Ambrose E100. Okay, so if you make your deposit and you maybe forgot to input the promo code, you can always use the Octa official site or the app. Go to your profile, go to the promo code section, enter the promo code Ambrose E100 and press activate, and then you can enjoy your bonus. Remember that there's a certain volume that you should trade before you can withdraw your bonus. It's going to be there for you to see and calculate and know how many volumes what you need to trade to redeem your bonus. So keep that in mind, guys. Let's see the questions that you guys have for me. Should we take a buy entry on gold, guys? I didn't check gold today on the live, and because of our time, I won't be able to check gold right now. How can we put stop loss if we want to trade? I just showed you that on the chart with the Octa trader. I showed you how to put stop loss. you're using a pending order, you can put that, or you can execute the trade and modify it and put your stop loss. Okay, I'm just going to quickly talk to you about gold, right? Just so that you can get an insight. Gold is sitting on a key level right now, not a good time to buy. I don't usually, tell traders to buy when the market is at a key level. But we want to see either a consolidation and another break above this previous high before you can buy, or a push to the downside, and then we can capitalize on small bearish momentum. But at this point, this is not really a good time to buy gold, even though the potential for gold is still pretty much bullish, right? The next stop would be here. But again, we're trying to enter at the best possible price, right? So we want to see the market show us momentum above this level. We could either see a consolidation and a potential break, capitalize on about 200 pips, no problem, or a push to the downside, retest at this point that we have here, here, right? And then a bounce to the upside as well. But right now, not a good time to buy gold. Okay, just wanted to briefly tell you that. Okay, to summarize today's session, we discussed the Zap Zone trading strategy, its components, suitability for traders, and we applied it on the chart. We looked at the live chart and used the Zap Zone strategy on the chart as well, different sessions. We also talked about trading principles, risk management, and some of the steps that can keep you actively trading in the Forex market. Okay. Can you please discuss on some trade setup other than GBP USD? Because of our time, I don't think I'll be able to do that. But what's going to happen is you can let me know in the chat the pair or the instrument you want me to talk about. And in the next live trading session, hopefully you're here and then we can discuss that, okay? You can still comment on the next live trading session and we'll discuss that. Let's see. Do we have any other question? No gifts for traders today. Come on, I gave you 100% bonus, right? Use it. I gave you a promo code that can give you 100% bonus. Okay, so guys, I'm just going to wrap up now. And again, it was an amazing session. I want you guys to also remember that, your mindset is important with trading alongside other strategies that you've learned. But most importantly, your mindset. It's one of your most powerful tools in trading. So make sure you cultivate a positive, resilient mindset that can withstand the highs and the lows. Believe in yourself and your abilities and approach the markets with a clear mind, with confidence, and then you see yourself, set up for success. It was an amazing session, and I'll see you guys in the next one. Bye, everyone.